Welcome to my final morning report charts proposal on Friday the 3rd of June with me, Rich Perry, market analyst at Antec Markets. On Non-farm Payrolls Friday, let's look at gold. And we've seen this sort of consolidation as well in gold in the last few days. But I spoke about the fact that the dollar has been under a little bit of corrective pressure in the last couple of days. But look at the gold price. It's actually been falling away. Even though the dollar has started to sort of be a little bit corrective. Now, I think you would say that that's a little bit disappointing. And now you had those 9 consecutive bearish candles and 2 subsequently to that. So in the last 12 sessions, you've had 11 bear candles. So you'd still say that the pressure is pretty much on the seller onto the downside. You are holding on to this sort of 38.2% fib level. Pretty much 12.05, that's 38.2% fib of the big rally. 12.05, and that is the reaction low. I'll show you on the hourly chart. You can see zoomed in. The 12.05 was the reaction low on Wednesday. So pretty much bang on that fib level, and that's holding. But this is basically a sideways consolidation now, and even then you're sort of drifting into a more negative configuration on these momentum indicators now, because the RSI is sort of not far from 30 and failing below 60 on the hourly. So that's not great. You're trading around or just below the moving averages. Again, not great. The overhead resistance coming in around 12.20 again is pretty much not a million miles off the old support becomes new resistance, and then you've got that added resistance at 12.33. So between 12.20 and 12.33 you've got a fairly big level of overhead supply that is holding back a recovery on gold, and the gold bulls just cannot seem to get any real traction in this market. It's basically flat on the day to day, sort of just less than $1 higher. And obviously that sort of consolidation is coming in front of payrolls, and the market is clearly sort of on the sidelines with the volatility that you get off payrolls, because the gold price tends to be very reactive to the payrolls report. So you can expect to see some direction in the wake of the payrolls report. If you get a strong payrolls report, that'd be negative for gold. A weak payrolls report would be strong for gold, positive for gold. So at the moment, the technicals are certainly suggesting that the rally has really struggled to gain any real traction, and the bears are pretty much still in control. Look at the stochastics on the daily, turning, well, certainly not recovering anyway. RSI struggling under 40, MACD line struggling under neutral. So pretty much across the board, it is still suggesting that the bears are in control, although clearly the support is holding for now. It'd be interesting to see if that continues. But a break, the key support comes in at 11.90.40, and then if you break that, you're sort of back into serious correction mode. So I wish you good luck in your trading today, and I will speak to you again on Monday. Thank you.